ShadeTheMBA.com. This is John. This report is for the 17th of February. Well, easy come, easy go. MBI magenta crossing back below yellow MBI and below 25, which that's key because that usually indicates a significant amount of distribution. White starting to pop its little head up right there above red. Uh, 8.43, excellent. Anything over 6.5 from a daily standpoint is perfect. And DOC spread. So confluence of events carry through, and that's what we're seeing already this morning. Uh, Significant breakdown, and it's just accumulation of uncertainties. And the more uncertainties, the more jittery people get. So you're going to get this back and forth, and it's perfectly normal. And I don't see anything overly dramatic. The situation worldwide doesn't really change much. The economic situation is bad. There's been enough force pressure here on this counter move to the upside, despite the looming dangers. Because, again, if any one of those doesn't work out to be true, then things aren't as bad as some think. Uh, and also, you forget the inflationary factor that the market will go up just to compensate for the devaluation of the dollar. Breaking below the key support here for the NASDAQ at that 12,004 range. So, again, NASDAQ's not going to be in as bad a shape because, as you can see, the steel's already reset. So I would look for first signs of recovery coming in here intraday. When that does happen, that will be the spark, just from an obvious view. Oh, TLT, what a shock. Heading back down to the 0% as it should have never even gotten up to this level, but that's okay. Starting to self-correct. It'll be interesting because in significant down days, usually you get a lot of pressure to the upside, but there's just no question yields have to go up. It's not going to change. Crude building significantly and yet still holding up in price relatively decent, which is interesting. So we're still up in the 77 range, below 80s. It's extremely elevated given the situation. And gold really taking it now. We've filled in all these positive extremes going back through here. And we have just a couple of stragglers from back over here. But that would take us back into the 17s. That would be a bit more of an extreme move. 1730s, and at the upside, this one's already been filled just under 18. So there's still potential for it to retrace and not be anything out of the ordinary. From a euro standpoint, showing a little bit of pressure down to 1065. That's getting towards the bottom end of the range, which around 105, 104. So we'll see, because you break that 104 and a half and things get precarious again, going back into subpar, which would be interesting given the support that they've received. It would just mean a lot of capital flight out of Europe, which is an interesting one as well. Bitcoin giving back a little bit, but again, turning out to be the safe haven for fear, now that a lot of the so-called corruption things have been worked out, theoretically. It's just a limited number of people searching for this asset. That's all. You're always going to create that up move. The downdraft over that long period of time really threw out any weak hands, and there really wasn't much from a volatility standpoint that way. So it really took care of everything. NETH a little bit stronger. So from a 50K standpoint, took the short there from the peak at the 50% when the white MBI took the lead. And like I pointed out, when we had these other MBI leads, that it would be a significant move. We thought we might see some elevated 0%. It rose a little bit, but this last rally coming through with the short signal and plummeting all the way back. to the same range that we've been in. This isn't anything new. It was beautiful though from a 5K standpoint. So I had marked these and put them on the Skype chat with our first indications of positive extremes that needed to get filled coming off the end of previous day. And in pre-market, sure enough, boom, they started filling back in all the positive extremes, and that stayed red for quite a while in the morning. And that's when all the bears thought they had it under control, and bulls stepped in to really fight it back up. Pretty good distance. You went back from just around 41 all the way to the 4140 range. But then another wild thing happened. It wasn't sustainable. And that's when the cascade started. And you could see the ranges between these. So you had a pretty straight cascade until you got to this previous algo level. Sort of floated around there. They looked to try to do the exact same thing that they'd done earlier in the day, but just too many people exiting the setup. And this is what we have in the pre-market, a continuation of that. They'll fight back up to the 4080 range, and we'll be able to see where it goes from there. So quite interesting developments, and I think we're starting to, as I suggested, that by March and that we would have a lot more clarity as to what the developing situations are with the economy and that, and that's going to help define how things will go the rest of the year. So we'll see. As always, though, trade well. Look for me on Skype chat. Have a good one.